The views expressed on the following program are not necessarily those of this station, its owners, staff, or management. The following program is sponsored by Citizens Financial Security. In a world where information is power, the original Money Doctor inspires you to rise above it all and plan ahead with guaranteed success. William F. Richardson is the original Money Doctor.
This is William Richardson with The American Dream and the Principle of the Day. Today we're going to talk about Rule 6. So I have 6 principles that I talk about, that I share, that encompass everything about what I do. What sits on top of that is always the 10-10-80% rule. Today we're going to talk about privately financing your money and your retirement and everything that you do inside that, by learning how to become your own banker. Now, I'm not talking about you having to go out and capitalize and go to your state and the government and become an actual chartered bank. This is a conceptual bank. This is a bank that you want to not only deposit your finances in, but you also want to deposit your intellectual assets, how you made money, how your family changed over time, what your father did, your grandfather, your mother, your grandmother, how they became who they are, and how their assets changed them, and those experiences. So we're going to deposit all that money into the family bank, and we're going to withdraw that knowledge when we need the knowledge. We're going to withdraw the cash when we need the cash. And so with that, we're going to spend the first little bit here talking about the cash side. So never run out of money, never lose money, and always increase money and reduce taxes. So if those 3 top principles, or those are things that we can put together in our bank, our family bank, and there's only a few places that you can make that work exactly that way. And that always leads back to my situation, generally, where we are using the largest insurance companies in the world to mitigate the risk for us, because they're very good at doing that. They even bailed out the United States government in the Great Depression. So we know they know how to handle risk. So we want to utilize them for that purpose. So how do we become our own banker? How do we become an honest banker? Well, you're not going to not pay your taxes, right? So you're not going to cheat the government, or you could be in a bad situation. When you borrow money from another institution, they charge you interest. If you don't pay them on time, they charge you a penalty. So we do everything we can to have our house in order and to be self-sufficient and to pay all of our bills on time. Why can't you do that to yourself? Why could you not set up a conceptual bank in the right institution that allows all the right resources that banks, corporations, and the smartest money managers use to establish wealth? Why can't you do it? Maybe because no one's ever talked to you about it or showed you how to do it. Maybe you heard about it or read about it, but you didn't have a coach, a mentor. You didn't have someone on your side that had your back and said, this is what we're going to do. But if it doesn't feel right to you and you can't get over the hump of changing a lifestyle, you're not going to do it, because it's actually better for you to stay where you're at than to start something and not be successful. So everyone that gets into the plan of learning how to become their own banker, or utilizing the 10-80% rule, or utilizing how to properly use equity in their home, or the Equity Max program, or the education level, there is using principles in the correct way. So first thing you need to do is you need to have the money to go into the family bank. Where does that money come from? It comes from being disciplined and saying, here's the 10%. I'm paying myself first. I'm taking that money. I'm putting it away. And this is not some get-rich-quick scheme that I'm going to make money overnight. I understand the laws that formulate around compounding interest and triple compounding. So I want to pick that right asset class to allow that to work. So I put my money in there and it's growing, and I'm able to do all these different things with it, which goes back to many of the different principles that we teach. Is now the money's there, I have an option. I can just let it grow and use someone else's money. I can keep the money there and collateralize it and borrow money from someplace else. I can have a business and borrow, pay interest back, loan. I have a lot of different options when I become my own banker and have a choice and opportunities to do that. So if you are a small business owner or a corporate executive with a large corporation, you may have some type of defined benefit, some type of corporate benefit package, executive bonus package. Now, it's a great place to use a family bank with an executive bonus package that the business can fund that for you and even cover all the taxes, because what do we want to do? We want to pay the tax on the seed, so all that money in the family bank continues to grow, triple compounding, tax-free. We access it when we want to. Who tells us how to do that? Nobody, because the government's not involved in that. The institution is not involved in that, because it's all written up in a contract that we know upfront exactly where we're at and how we access our money and what's involved in that from day one. There is no surprises. So if you're going to be your own banker, you want to be in charge of where your money's going. You want to be in charge of what the costs are going to be, how much you're going to make on interest. So you have a choice. If you're going to pay outside 7%, why would you charge yourself 2%? I mean, you could if you want to give yourself a break, but the best thing to do is charge yourself 7% or even charge yourself 10% and have additional money go back into your family bank and allow that money continue to compound and grow. So now let's say you want to purchase a car. Normally you have two options. You go to a financial institution and say, here's the car I want, here's the price, here's my credit score, what are you going to give me? And you're asking. And they give you a percentage, they give you a rate, you buy your car, you go home. Second option is you saved your money up year after year, 5 years or 10 years. It's in the bank, get a little bit of interest, not much. Then you take all that cash and you go buy the car. Well, what happened to both those two transactions? One, it was costing you money. The second one, it's actually costing you a lot more money because you just stopped the compounding interest. You just stopped the opportunity for all that money to work for you, to go to work for you when you took the money out of the institution, dropped it into a vehicle, a liability that as soon as you drive it off the lot, it's going to reduce in value. So if you want to own something and you say, listen, I own everything. I don't want to owe anybody else any money. Understandable. I can agree with that. I just want you to look at a different place of where you get that money. I want you to go and allow the family bank to grow. Then I want you to collateralize or borrow from the family bank and pay yourself back. Just like you would do with the standard institution bank on the corner, and you'd borrow the money from them and pay it back. The difference here is you have an opportunity. If life hits you with a curveball, you can go to the banker, which is you or your spouse or the entire family, and say, here's what happened. Mom, dad, grandpa, here's what happened. Can I get a break on the loan? Because there's something else I can do. And you can decide that as a family and make a decision of what's the best thing to do. You have total choice and control over what's happening when you become the family bank and you put the money into the right institution that allows it to be safe, liquid, and accessible at a great rate of return, and you're totally in charge. So remember that that's where we want to be, and we want our money to continue to grow and allow compound interest to work for us, because what does interest do? It never sleeps. And that's a great thing when it's working for you, because you can have money working for you or money working against you. And as your own banker, you're going to learn how to have your money working for you as the banks, the corporations, and the smartest money managers have been doing for decades and decades, having that backed by some of the largest companies in the world who, what? Have your back. With that said, keep your money safe. Living with purpose and real intent. If you're as concerned as I am, and you're not the type to sit around and wait for something to happen, there's something you can do. A special gift invitation. How to get growth, protection, and income for your money. Send a request for a special promo code to watch this new online video training series absolutely free in the comfort of your home or office. You will learn how hardworking American families protect and control their retirement money and never expose it to stock market risk or massive taxation. Watch this free video series and learn the rules. Send requests to info@citizensfinancialsecurity.com. That's info@citizensfinancialsecurity.com to view video online. Video series is shared as a public benefit for enlightenment.
As a financial strategist, William F. Richardson coaches college students, families, and businesses on income planning strategies. He focuses on how to create lifestyle benefits and retirement savings by following simple rules and proven concepts to optimize assets, preserve capital, and minimize taxes. During the Great Recession, clients of Citizens Financial Security who followed these strategies didn't lose one penny of their savings or retirement money, while others lost 30 to 60% of their life savings as the market adjusted. Assuming you've chosen to follow these strategies, there would have been zero losses due to market volatility, and your financial goals would be on track. Your money would have been triple compounding, protected, and available tax-free for any reason. Visit us at the World Economic Report at moneydoctoradvisor.com and visit our corporate sponsor, citizensfinancialsecurity.com, or call 916-500-4905. That's 916-500-4905.